So, hello everyone. Welcome to the One Lattice podcast. I'm Salgaonkar, a manager in the BFSI vertical at One Lattice. Today, we are going to talk about the next phase of consumer fintech in India. And to do that, we have with us Mr. Abhinav Nayar, who is the founder and CEO of Mool. Mool is a financial platform designed to bring all aspects of an individual's economic life in one place and have them take good decisions. Abhinav, a real pleasure to have you with us. So, how do you see, Abhinav, consumer needs sort of changing in terms of seeking, let's say, a one-stop financial, solutions where I have one single platform or one single app through which, I can sort of consume all of my financial needs as against, let's say, dedicated apps or dedicated platforms for each service?
Well, Harsh, I think that both kinds of approaches solve for different problems. We've seen now about a decade of fintech innovation, at least in India, and possibly longer depending on how far back you look. But it can fall into three fairly clear phases. The first, let's say fintech 1.0, is really about the digitalization of different financial institutions. The emergence of net banking and UPI that just made certain kinds of financial behaviors instantaneous and possible. Then you saw fintech 2.0, which was about consumer marketplaces, right? Wherein for various categories, whether that's investments or insurance or lending, people could come onto a marketplace and in a fairly frictionless way check out the financial product that they wanted from whichever provider was part of that marketplace. And now what you're seeing is an interesting reaggregation across BFSI that isn't leading into another store shelf or marketplace, but rather journeys that are powered by personalized advisory, data, and synergies between different kinds of financial products, right? So I think where marketplaces tended to solve the problem of optionality and choice and ease of checkout, you had challenger vertical entities, right, or companies that focused on one vertical quite narrowly and provided a good challenger product in that vertical. Particularly around MSME lending or something else that were just fixed on providing a better value proposition. Some of the D2C insurance companies that are good.
Yeah.
Third kind of company where the reaggregation of financial services isn't turning into a marketplace, but driving synergies between the lending that you're doing, the payments that you're able to execute and automate, the surplus cash that you're able to invest with a meaningful tenure and asset allocation, and the insurance that helps ensure that your financial picture as a whole is fairly well protected, right? So I think this is really exciting because it speaks to the original promise of fintech, which was to actually help people be good with money. And I think a holistic approach executed differently is a welcome change.
Okay. Specifically, I wanted to ask you about artificial intelligence and machine learning. I mean, these have been the buzzwords of late. I mean, almost randomly thrown around in every kind of discussion. And we are living in the era of layoffs, where the primary reason why companies state behind laying off employees is that the focus is now on automation. The focus is now on AI and ML. So, with that perspective, even a lot of, homegrown fintech companies are also leveraging these kind of tools to let's say, deliver a lot more personalized, wealth management services, or ranging from taxes to insurance to investments and all. So, how do you see robo-advisory or services which are backed via AI and ML tools as a concept to sort of pick up?
Well, I think it's a fantastic time to be innovating in that direction. I think one of the most notable things about the Indian market is that you have available for the first time granular financial transaction data across all asset and liability accounts available through account aggregator to any FIU.
Mhm.
Uh, and at scale, of a couple million customers and potentially billions of transactions, the kinds of insights that you can cull out about a specific person, their consumption basket, their cash flow curves, their risk and resilience, the kind of lookalike audiences that you can create there is really powerful. And I think over the next couple of years, we'll see uh, competition coming not in the form of what financial product you provide at what price point, but the data efficiency that is able to drive um, product funnels and the lifetime value that
Mhm.
fintech companies are able to generate purely through better data-led execution.
So, Abhinav, from a company standpoint, obviously, since a lot of data is available, is being generated, so it definitely helps them, let's say, curate better products, let's say a more quicker launch to the market and stuff. But from a consumer standpoint, if I am a consumer,
Mm.
so how comfortable do you think, today's generation is with the fact that there is a robo or a software which is recommending financial products to me, whether it could be, let's say, a small case, or it could be some insurance product, or even it could be a loan as well, that there is no human interface involved over here. There is some application or some software which is recommending a financial product to me. So how do you think is today's generation kind of comfortable with this thought?
Well, I think you're describing a design problem rather than consumer behavior or trust problem. It's true that there's a lot of technology and the quality of software, and then the influence that software can have on our lives is quite, and our decisions particularly, sometimes even some of our more personal decisions, um, is becoming quite significant. But it's up to a product manager and product owner
Mhm.
ultimately to make the decision about how to represent that technology, right?
Mhm.
um, I hope that the last thing we do is start inundating consumers with a whole lot of charts and graphs, right?
Mhm.
And instead are able to um, use alternative approaches to UI and UX.
Mhm.
Uh, whether that's chat, voice, or as we love to do at Mool, illustrations, to convey a meaningful insight to a user. And I think as we do, the more and more that products make themselves invisible, I think they will garner more trust. Let me just explain what I mean by that. A term that I often use with our team here at Mool is to say that our product is just a smart passbook, right? We
Mhm.
are simply financial stationery that are using templates and certain forms to be able to empower the user to have a better interaction with themselves, right? So we're very careful to not position an offering as Mool recommended or suggested by experts, but think that the better that we can use our data capabilities and transaction capabilities to surface choices in a manner that any user just needs to bring their value set uh, to that product and then have
Mhm.
it work well for their values. I think that will just make this feel more like a personal tool rather than ceding control to computers.
Okay. Okay. So moving on to, let's say, financial inclusion, that has been the government's agenda as well. I believe in every budget or even in election speeches also, this has kind of become a regular feature, where even the government is saying that the focus is to take, financial services to the masses, ensure that everyone, is part of the formal financial system. We saw that, I think to a large extent being successful via the Jan Dhan scheme, then UPI as well. But overall, if you look at statistics, only I believe 7.5% of the population, actually makes investments in financial markets or has a sort of a formal exposure. So from an education standpoint, how do you see fintech companies sort of educate non-participants to, to help them take their first step towards adopting such kind of financial solutions, whether it could be investments or even insurance?
Yeah, this is the heartbreaking problem, isn't it? That despite all of this innovation, most of the value from the products and companies that have been created in the last decade has really
Hmm.
accrued to, say, the top 3 percentile by income in
Hmm.
India. And we haven't had an inclusive, broad-based change that's come down to the real Indian middle class, right? And I'd
Hmm.
remind us that the Indian middle class really earns about 15 or 20,000 rupees a month.
Hmm.
Um, and so you see, a couple 100 million people uh, who are earning disposable income for the first time are maintaining a fairly healthy savings rate, certainly higher than the savings rate in many developed countries, but are completely excluded from meaningful ways to compound their savings over their lifetime, and or to at least beat inflation. And I think at the heart of at least the way that we think about Mool is this problem, right? That why are hundreds of millions of people unable to make decisions towards their financial future? And the way that we think about it is that any decision has 3 steps, right? You have some amount of education, you have which means an awareness of possibilities, or at least a comfort with um, the types of tools and range of solutions that may be on offer, to be able to evaluate them as a next step in a certain personal context, right? And then an awareness of actionable options.
Hmm.
And today, I think all three of these pieces are, um, connected together very loosely. There are efforts on financial inclusion and, or rather, financial education and literacy that happen in one corner. There's, um, advisory that is personal and contextual, that is really hard to scale and still happens with a very small pool of financial advisors. And there's a range of options which are fairly well established and exist in marketplaces, but most
Hmm.
people are not able to make the jump from the first to the second to the third. And I think the way to expand this addressable market and get the next, say, 20 percentile by income within the fold of regulated financial services is going to be by uh, with a couple of principles. Number one is that I think rather than spreading literacy and getting customers or users to understand the terminology of the financial services industry, I think manufacturers and the financial services industry needs to occupy the vocabulary and mental models that their customers actually have and operate with.
Hmm.
The second is to create products that don't just offer checkout journeys, but are very good at scaling that personal context, and making it legible to people who don't have speak English as a native language, but make very consequential decisions every day about every part of their life. Um, in communication with their neighbors and providers available locally in regional languages.
Hmm.
And I think the third is to just build around digital confidence,
Hmm.
uh, and use that as a prism for the success of design.
Okay. You since you mentioned about language, I believe I saw it on your app as well. So you provide your app in vernacular languages as well. That is not just restricted to, English or Hindi, but the local languages as well. Because I believe most of the fintech apps primarily they function in English, which once you go to, let's say, a tier 2 or a tier 3 kind of a location where people may not understand it or may find it daunting. Or let's say if it's in Hindi, then again, once you go to the hinterlands, onto the rural areas, then perhaps even, Hindi as a language could also for them be daunting. So, can you kind of just explain from Mool's angle, what kind of initiatives are you taking to sort of, drive financial literacy, drive financial inclusion?
Sure. Well, I think language and being able to understand what's presented is really key. Um, I don't think translation is enough.
Mm-hmm.
Um, Oftentimes we found, even as we put our UI together, that just running Google Translate or even human translators for that matter,
Mm-hmm.
converting language from English to, I think the latest language we added was Santhali,
Okay.
which is our 17th language. And so you have to be aware of the cultural context when translating, right? And you sort of need to be able to write again within that cultural context of the language, and realize that your design um, is is exposed to such kinds of problems of cultural context. Um, so yeah, I think that's an important point. But beyond just the accessibility of language itself, I think financial products need to be simpler to understand,
Mm-hmm.
right? Um, in that the terms should be clear up front. They should be short and actually readable, and the
Mm-hmm.
most critical points should be available to you intuitively at the moment that you're trying to make a decision, right?
Okay.
And so innovation in financial services, I think, often becomes innovation in uh, the contracts themselves,
Mm-hmm.
right? And just rewriting a lot of those, and being open to principal agent problems, or to misalignment of incentives, um, and being empathetic about the kinds of ticket sizes that feel affordable to people.
Mm-hmm.
And there are many ways, such as these, that accessibility can be enhanced
Mm-hmm.
uh, beyond just translation.
Okay. Okay. So, Abhinav, largely what we have seen is that there seem to be two types of, users in the market. One, who is financially educated, who has that exposure. Basically, they have sufficient money. They know what investments are, what insurance products are, are out there. But essentially, they are seeking someone who can help them have control over all of these activities and all of these decisions. And then there is another set where you could say, that who are sort of financially illiterate, if I may put it that way, who want to understand the basics, and then also to a certain extent want a dedicated hand holding to sort of manage their money. So in your opinion, how can financial solutions be sort of tailored to both of these segments?
Um, well, I think what you described is more of a spectrum rather than a set of two alternative choices.
Okay.
Um, I think the truth is that you have people at every point along that axis that you described, right? Going
Mhm.
from I know exactly what I'm doing and I just need it executed well, to I don't, somebody who's saying I don't even know where to begin.
Mhm.
And I think on this point we can just learn from uh, the previous advances that have been made in UI, uh, and I think operating systems are a good example of that,
Mhm.
wherein um, you know the computer is, or the login screen is pretty much the same to everybody who uses a computer,
Mhm.
right? But the way that that I use it, and one of my developers use it, and the way that my mom uses it,
Right.
uh, lead into very different experiences,
Mhm.
and it feels comfortable to each of us for the type of use that we're making.
Mhm.
And I think that can be a useful design principle in for companies that are trying to create an operating system of money,
Hmm.
and realizing that money and finance are really means and not ends in themselves. And the more that our products help people discover their ends better, um, then there will be you know well well organized and personalized paths
Hmm.
towards execution and implementing the right answer or a financial plan.
Hmm. Just taking this point ahead. So the financial needs will obviously change across different age brackets. So for instance, something which is, let's say, suited for a Gen Z, or something which a Gen Z wants, may not be an appropriate fit for a millennial or a boomer. So in such kind of a scenario, where the needs are rapidly evolving, so how does the fintech industry, kind of tend to address these specific requirements at a demographic level, and sort of incentivize these consumers to adopt these services?
Um, well, first, I think we need to recognize that while we can use archetypes, archetypes have some inherent flaws in them, right?
Hmm.
Because they are stereotypes essentially. And what we've seen in our user data is people who share a lot of things in common because of one or two key differences um, will will look less like each other or more like somebody else with whom they seem to share fewer factors,
Okay.
right? So taking an example of one of our users, we I know somebody who's just graduated from Delhi University, is trying to work as a social media consultant, has interned at a couple of places,
Hmm.
and has just landed her first job, and
Hmm.
is getting paid, say, about 35,000 rupees a month. And she's
Hmm.
about 22, 23 years old.
Hmm.
While she has the same income as somebody else who's 28 years old, living in um, Hazaribagh,
Hmm.
right, Jharkhand, who is um, essentially kind of getting a stipend from a family business.
Hmm.
uh, while they're at similar levels of income, I think uh, their financial plans could look quite different,
Hmm.
right? And it's not just the financial plan that an advisor would recommend for them, but actually their own desires and wants and priorities could be
Hmm.
quite different. So I think the first step is to be open to those kinds of differences and have meaningful ways of capturing them so that you can implement your users' desires with
Hmm.
some guardrails in place, right? So that if your user is doing something reckless, um, there is a fairly objective piece of advice uh,
Hmm.
that comes to them, right? Or if they're not participating enough in and have very conservative equity allocations, I think you can, one of the things that we've tried to do is compare that to other people like them, and convey what that difference meant for somebody else, right?
Okay.
So I think you can personalize user journeys in some interesting ways.
Okay. Understood. Abhinav, consumers have sort of always been apprehensive about entrusting, someone else with monetary transactions, and I think this kind of compounds when it comes to the digital world as well. So I think there was one report that I came across by Morton, where it was reported that 36% of Indian consumers have sort of reported unauthorized access to their bank accounts. Almost 1 in 5 person has experienced some kind of identity theft. And I think in 2021, the financial year 21, around 27 million consumers were kind of impacted by such kind of identity thefts. I think all of us, at least me, almost once a week, I get some kind of a phishing SMS saying that your bank account could be deactivated if you don't upload your PAN card and all of that. Essentially, if I click on the link, then I will fall prey to such kind of an attack. So, with this context, how can the fintech sector sort of help build greater credibility in the eyes of the consumers?
Well, I think this is an extremely important topic which goes under discussed. Um, the sheer scale of fraud and attacks and social engineering of all forms that we're seeing exploited, uh, really goes on to suggest that fraud is the skeleton in the digital economy's closet.
Yeah.
And it's about time that we took this out and really looked at it seriously.
Mhm.
I think for too long, people have thought about digital as this, costless panacea that is just going to reduce service costs and drive unbounded growth. Um, and I think we have to recognize that it poses its own share of risks,
Mhm.
and we need to safeguard against them. And a couple of things that I think would be helpful for the industry to try to do collectively on this topic are, number one, let's talk about this a bit more. Privately, every fintech founder that I know, including myself, has struggled with fraud or some kind of exploit of their system. And this is a phenomenon that is pretty much new to everybody involved, right?
Mhm.
It's new to users, it's new to intermediaries and fintechs, it's new to banks, and it's new to the regulators as well, right?
Mhm.
And so it's only when we talk about this openly and objectively,
Mhm.
clinically, one may say, that we are going to arrive at some practical solutions. Um, Two, I think we should share in that vein some common knowledge about what are the kinds of MOs that we're seeing, exploits that people tend to hack, what some recommended defenses against them are,
Mhm.
what a list of bad actors or at least endpoints are. So there's some preventative measures that can be taken to mitigate. Um, Number three is when something bad does happen, um, we should be able to uh, use a scalpel instead of a hatchet in that
Mhm.
situation, right? I think it's pretty easy when to say that, okay, let's shut down this program or try something else, or um, lean into that sense of fear that we all feel around this topic, and instead try to understand that in multi stakeholder programs where there are a number of entities involved, what does the security value chain look like, right? And who is responsible for what?
Mhm.
And how do we ensure that this system is protected and its protection is evolving with the
Mhm.
nature of exploits that we see? And finally, I think there's no substitute for investing in consumer education on this topic, and even training law enforcement better uh,
Mhm.
to 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 address and resolve problems where they do occur.
Mhm. Any specific initiatives that you're taking at Mool? Because I think one of your main user base is someone, or rather, I believe I heard you say it somewhere, the next emerging class or something like that.
Mhm.
So, any specific initiatives that you're taking for, let's say, your users or for this specific cohort?
Yeah, absolutely. There's a combination of activities that we do. Uh, One is that we talk about financial wellness a lot.
Mhm.
We've done this now with about 50 colleges and a few dozen employers, quite
Mhm.
large employers. And one of the things that we talk about when we discuss financial wellness uh, is safety, security, protection, online behavior.
Mhm.
Uh, and quite explicitly cover that topic
Mhm.
in our programming. Number two is the way our product is set up. We do have a social feed that
Mhm.
allows us to push content out and be able to engage users with uh, interactive widgets and UI on a range of topics.
Mhm.
Uh, and this is a topic that we often do cover. Just a regular reminder for what to look out for, and to just never click on links that you receive in an SMS,
Okay.
or to never provide your personal information to anybody. Moreover, we also use the profile section of the Mool app for people to be able to securely keep their data for themselves. This is information that's encrypted. It's whether it's their documents or um, other profile information, and our users use this almost like a feature because they know that there's one secure place that they can go to see their PAN number or any other information that they're currently looking for,
Mhm.
and securely share it as well. So I think think of security not as an afterthought, but really as a consumer feature,
Mhm.
and a place where you can create real value for your user, even when things are going well.
Okay. Okay. So, as we come towards the end of the session, I think we started off discussing how the fintech in India in general has seen phenomenal growth and adoption. Looking ahead, are there any specific sectors within fintech that you are bullish upon?
Um, yeah, I think there are quite a few. Um, I think the sector that we're operating in, or rather the thesis that we're operating in that data-driven, advisory-led
Mhm.
consumer platforms have an enormous role to play in expanding the addressable market and getting the next 200 million Indians on board,
Mhm.
um, with not just access but real usage.
Mhm.
Uh, Number two is, personally, I think there's at least about $100 billion of value that's going to get created over the next decade
Mhm.
from financial data. The kinds of analysis and insights that are possible at scale from there, I think we haven't even scratched the surface
Okay.
on that subject.
Okay.
And I think uh, a third area of promise uh, is a meaningful connection of financial data and behaviors to consumption and e-commerce.
Mhm.
I think a lot of e-commerce platforms are similarly set up in the way that fintech marketplaces used to be, right? In that it's a marketplace. You sort of come, browse, do some discovery. You may already know what you want, and so you just quickly check out. But there's a lot of context that could be added there. Um, One of the things that we're exploring at Mool is how can we create not a shopping feature, but a savings feature, looking at the key categories that people are already spending money on, and being able to deliver them some savings on their known staples
Mhm.
using ONDC. So I think context and intelligence has some application on the e-commerce side as well.
Okay. Okay. Any specific thoughts on, lending or digital lending? Because this space or lending as such is almost like the oldest, industry that has been out there. But almost
Yeah.
every fintech player, if you look at it, they may start off doing something else, but eventually there's this old saying that everyone has to do lending at the end of the day. So any thoughts on this sector?
Well, I'll just say that I'm looking forward to the day where people are not competing to give desperate people some very expensive capital, but
Hmm.
actually using lending as a way to lower people's borrowing cost, and the cost of capital in their lives. And I think that
Hmm.
can be done by finding better ways to underwrite and manage collections, lending to specific use cases, increasing the availability of secured lending
Hmm.
that has a lien on including financial assets. And there's no reason why the credit spread needs to be so large in India that even our microfinance rates are at about 35, 36%.
Yeah.
The day we're able to execute a digital instantaneous loan to a borrower for 8%, and then still have a strong book on it. I think that's that's the utopia worth aspiring to.
Okay. Okay. So that brings us to the end of today's episode. Abhinav, thanks a lot, for taking out the time and for sharing your views. Really look forward to hosting you again for another interesting session. Really, thanks a lot.
It was a lot of fun for me too. Thanks, Harsh.